Stocks, the ownership game. You know what's wild? Every time you buy a Starbucks coffee, you're making Howard Schultz richer. But what if I told you that you could flip the script and make money every time someone else buys that overpriced latte? When you buy McDonald's stock, you literally own a piece of every Big Mac sold in 100 countries. Every Happy Meal, every McFlurry, every ice cream machine is broken complaint. You get paid from all of it. It's like having a money printer that runs on other people's hunger. But here's where it gets interesting. You can either be the tortoise or the hare. Dividend stocks like Coca-Cola are the tortoise. They pay you cash every quarter just for owning them. It's boring, but it works. Growth stocks like Tesla are the hare. They might make you rich overnight or leave you crying into your pillow. The stock market is basically a voting machine in the short term and a weighing machine in the long term. In other words, people are idiots who panic and create opportunities for smart money. When everyone's selling, that's when you should be buying. But most people do the opposite because emotions make you stupid. Index funds, the lazy millionaire's secret. You want to know the dirtiest secret on Wall Street? The guys in expensive suits who charge you thousands to pick stocks can't beat a simple index fund. It's like paying a chef $500 to make you a sandwich when you could just buy the ingredients and make it yourself. An S&P 500 index fund is like buying a slice of the entire American economy. Apple goes up, you win. Microsoft crushes earnings, you win. Amazon dominates retail, you win. It's literally impossible to lose unless America itself collapses, and if that happens, your stock picks won't save you anyway. Warren Buffett made $1 million bet that a boring index fund would beat the smartest hedge fund managers on Wall Street. He didn't just win, he destroyed them. These are guys with Harvard MBAs and billion-dollar computers, and they got beaten by a fund that requires 0 brain cells to operate. Here's the math that will blow your mind. If you invest $500 a month in an S&P 500 index fund, starting at age 25, you'll be a millionaire by 55. You don't need to be smart. You don't need to time anything. You just need to not be an idiot and stop buying things you don't need. Real estate, the tangible wealth builder. You've been paying someone else's mortgage your entire adult life. Every rent check you write is making your landlord richer while you get nothing except a place to sleep. What if I told you that you could flip this script and make other people pay your mortgage? Real estate is the only investment where other people pay for your wealth building. Your tenant pays rent. You pay the mortgage. You keep the difference and the property gets more valuable over time. It's like having a money tree that waters itself. But here's where real estate gets insane. You can control a $250,000 property with just $50,000 down. If that property goes up 10%, you made $25,000 profit on your $50,000 investment. That's a 50% return because you used the bank's money to get rich. It's legal financial steroids. The government literally pays you to own real estate through tax breaks. You can deduct everything. Mortgage interest, repairs, even depreciation on a property that's actually going up in value. It's the biggest legal tax scam in America, and most people are too scared to use it. REITs, real estate without the headaches. You want real estate returns, but you don't want tenants calling you at 3 a.m. because their toilet exploded. REITs are your answer. It's like being a landlord without any of the landlord problems. When you buy REIT shares, you own pieces of billion-dollar real estate empires. Shopping malls, hospitals, data centers, office buildings. Professional managers handle everything while you sit back and collect checks from the rental income. REITs are legally required to pay out 90% of their profits as dividends, so you get steady income without dealing with broken air conditioners or tenants who think rent is optional. You can buy and sell REIT shares instantly like stocks, but you're investing in real estate. There are REITs for everything. Residential REITs own apartments. Industrial REITs own Amazon warehouses. Data center REITs own the buildings that power the internet. Pick your poison based on what you think the future looks like. ETFs, the diversification hack. ETFs are like index funds that went to the gym and got jacked. Instead of just buying the whole market, you can invest in specific trends that you think will dominate the future. Think artificial intelligence will take over the world. There's an AI ETF. Believe clean energy is the future? There's a clean energy ETF. Want to bet on emerging markets? There's an ETF for that. You can invest in entire themes without picking individual companies and hoping you're right. Unlike mutual funds that trade once a day like it's 1950, ETFs trade all day like normal investments. You can buy, sell, set stop losses, even short them if you think they'll crash. It's like having a Swiss Army knife for investing. ETFs charge tiny fees because they don't need expensive fund managers pretending they can predict the future. Instead of paying 1 to 2% annually for someone to guess wrong, you pay 0.1 to 0.5% for an ETF that tracks exactly what you want. Those fee savings compound into serious money over time. Bonds, the safe and steady choice. Bonds are the insurance policy for your portfolio. They're boring, predictable, and will never make you rich quickly. But they also won't make you poor quickly, which is exactly what you want when the stock market decides to have a nervous breakdown. When you buy a government bond, you're lending money to Uncle Sam, and he promises to pay you back with interest. It's the safest bet on earth because the US government has never defaulted. Corporate bonds pay more, but companies can go bankrupt, so you're trading safety for yield. Bonds don't exist to make you rich. They exist to keep you sane. When your stocks are crashing and you're questioning every life decision, your bonds are sitting there calmly paying interest like nothing happened. It's psychological armor for your portfolio. Here's the bond secret nobody tells you. When interest rates go up, bond prices go down. When rates go down, bond prices go up. It's like a seesaw, but if you hold bonds until they mature, you get your money back regardless. Smart investors use bond ladders to manage this risk. Cryptocurrency, the digital gold rush. Crypto is either the future of money or the biggest scam in human history. The problem is nobody knows which one it is, and that uncertainty is exactly what creates life-changing opportunities for people brave enough to bet small. Bitcoin went from being worth less than a pizza to $69,000 in just over a decade. Early believers became millionaires. But it's also crashed 80% multiple times, turning millionaires back into regular people with expensive regrets. It's financial Russian roulette with potentially massive payoffs. Bitcoin is digital gold, a store of value for people who don't trust governments. Ethereum is a platform for smart contracts and decentralized apps. There are thousands of other cryptocurrencies promising to revolutionize everything from gaming to healthcare. Most are garbage, but a few might actually change the world. The crypto rule is simple. Never invest more than you can afford to lose completely. Even crypto fanatics recommend keeping it under 10% of your portfolio. It's a lottery ticket that might pay off huge, but you need to be mentally prepared for it to go to zero overnight. High-yield savings, the foundation everyone ignores. High-yield savings accounts are the vegetables of personal finance. Nobody gets excited about them, but they're absolutely essential for not screwing up everything else you're trying to build. Here's why this matters more than you think. If you lose your job or get hit with medical bills, you don't want to be forced to sell your investments when they're down 30%. Your emergency fund is what keeps you from making desperate decisions that destroy your wealth. Regular banks pay you almost nothing because they know you're too lazy to switch. Online banks pay 4 to 5% because they don't have expensive branches to maintain. It's free money for doing literally nothing except opening an account. Calculate your monthly expenses and multiply by 3 to 6 months. That's your emergency fund target. Keep it at Marcus, Ali, or Capital One 360. They pay actual interest, while traditional banks are basically stealing from you with their pathetic rates. Here's how real wealth building works. Emergency fund first, index funds for your foundation, real estate or REITs for diversification, individual stocks if you want to gamble responsibly, crypto as your maybe I'll get lucky money. The secret isn't finding the perfect investment or timing the market. It's starting now and investing consistently regardless of what's happening in the news. Dollar cost averaging removes emotion from the equation and forces you to buy more when prices are low. Time is your superpower when you're young. Start at 25 instead of 35, and you'll have twice as much money at retirement. Every year you procrastinate costs you hundreds of thousands of dollars. Stop making excuses and start making money.